All right, so it's March 20th, 11 days since the banking crisis has first started, and today, following Credit Suisse and the UBS buyout, not much has changed, but I have a very important update for you. I have a very unique theory, and it is very simple. Pretty much, First Republic Bank is the black swan. So that's why I have this money here, and then I have this giant knife to get me a good thumbnail. You see what I'm saying? I stabbed the money. Wow, okay, I didn't know I could do that. So the money has been stabbed. But Chattadonia, in all seriousness, we have a lot to talk about. We have Jerome Powell on Wednesday, and this is why I'm bringing up First Republic. So we'll talk a little bit about what happened today, but I'm going to give you this theory right here, right now, right off the bat. So hopefully you like the video, because we do this every night. And if you haven't noticed too, we are right near 300,000 subscribers. So if you could hook us up and hit that sub button too, I love it. But let me tell you this theory. It is very simple. We have brought up WAL and we have brought up First Republic last week. And we said, be careful of the next set of regionals, especially as their share price goes down. And you've probably heard with FRC, all the banks were helping out and doing all of this. Well, we got updates today. The stock is lower, but now I am applying this to Jerome Powell on Wednesday. It is very simple. The fate of everything relies on First Republic. So how I'm looking at it is between now and Wednesday, if First Republic has a problem and something goes bad with them, Jerome Powell is going to pause rates. If nothing happens with First Republic, then Jerome Powell is going to go ahead with a quarter basis points. This is my major theory, but here's the caveat. Even if we get till Wednesday, First Republic doesn't have a problem. If First Republic goes under after the Fed, that could be the catalyst for an emergency Fed meeting. So, Chad, we got a lot to talk about. I'm going to explain to you the FRC news, but let's jump back a little bit to what happened this morning and what we got. So like I'm telling you, it's the 11th day. We're coming off of the Credit Suisse buyout with UBS, and a lot of people were expecting more bank volatility in Europe, but nothing really changed. Volatility levels, they remain the same as Friday. Even the bank stocks, they had a little bit of relief today, but if you notice, everything's still in the gutter, and it has been very, very wild to see volatility, bank prices, and now even Fed futures. Nothing moved today. So despite hearing about FRC on Friday, then going into the weekend and getting Credit Suisse and UBS, people's positioning is not changing from bonds all the way to equities, and that is a big deal. That's what I'm saying. Watch out for First Republic. But we have been doing something the last couple of days, and I hope you've picked up on it. But we've been dealing with this setup where you react in the morning to the news from overnight or whatever happened. Things feel good for a little bit, and then by the end of the day, everybody's panicking again about what could potentially happen, and that's where some of the stuff right now, like the Fed balance sheet, even the Federal Home Loan Board, these were two headlines. I don't know if you're aware, but since last week, this was the first time that the Fed balance sheet has went up in the last year and a half. That means it's borderline QE, even though the Fed says it's not QE. And then on top of that, we learned today, besides the discount window, besides the Fed balance sheet, the FHLB, people call this the ghetto Fed. It's pretty much considered the second lender of last resort. It's not supposed to be used like that, but we found out $300 billion has been taken out of it. The point I'm trying to tell you is that this is why the fears are lingering, because it's like, okay, we get a little bit of relief, things are good, but then everyone's like, wait, why is the balance sheet up? Why is the Fed giving out this money? Why are banks trying to tap very high interest short-term liquidity? What is going on? So that's kind of what we got here today. Everybody was expecting an update from the Credit Suisse stuff. Nothing really changed. Everybody was looking at domestic banks to hold a rally. Nothing really changed. All the bonds are exactly the same. And now we are getting ahead of Powell. And this is what I have been telling you guys over the last couple of days. The market is focused on Powell, because if he pivots or not, that is going to let investors know the brevity of this situation and whether or not we are really going to have a big crisis on our hands. So we're going to talk about the Fed. I still have another update on that. But like I was saying here in the beginning, the big story of the day, it was Credit Suisse and UBS. Even my people out in Switzerland, they were telling me how it's a pretty interesting deal. If anything, people are just mad they're not making as much money. Some people were saying if Credit Suisse actually just was bought out by the government and wasn't put on like a time limit with UBS and all of that, they would have done a little bit better. They even related it to the Swiss Airlines buyout. I learned this all today. I didn't even know this was up there, but even fundamentally looking at the positioning didn't change, the bonds didn't move, and even Europe bank volatility, nothing got expanded from there. And then on top of it now, let's talk about FRC. This is why I'm bringing it up, because it seems like nothing is moving ahead of Powell and everybody is waiting for Powell. But there's one bank that just like every single day, the situation keeps deteriorating, and that is FRC. So the news we got today, you remember that $30 billion? Remember I was showing you how the banks took the money and then they moved it from one, and then eventually all 30 or 5 or 7 of those big banks came in and then they gave the money back as deposits. Well, we found out today JP Morgan, alongside all the board members of FRC, he is trying to help that deal out along. And one thing they are proposing now is turning that $30 billion for deposits into a capital infusion. So what does this mean? Initially, it was there to just hold deposits and show, look, we could handle deposits. We have 30 billion of deposited money. We could guarantee it. But if it's a capital infusion, that could be used as working capital, aka instead of holding it as a deposit, now FRC can use it to pay employees, pay for other things, maybe interest to the Fed. Oh, yeah, that's what it is. Or even rent or anything else that they would need. So this was a really big deal. But right when this news came out, we had it in the day, but the stock got halted. It went from $18 down to $11, bounced up a little bit, and then kind of never really came back. So this is one thing that I think is the big story. And like I'm saying, in context, this story keeps deteriorating. If anything is going to panic until Powell, it is probably going to be FRC. So that being said, now, what I want you to understand is that we've gone through this 11 days. Again, this is like the beginning of the third week. Remember, this all started late 2 Thursdays ago. We had one full trading week, and now this will be our second full trading week of all of it. But now we have Powell on Wednesday, and you have one full day. So if anything, what we need to be watching here is the Fed future. So this is something we brought up a lot, and what it is telling you as of right now, the Fed is going to go forward with 25 basis points. That's as far as today. Nothing upset it. And the pricing, the odds are saying the Fed will raise 25 basis points. Why this chart is so important? I brought this up many times over the years. It is simply because the Fed has followed this probability for the last 60 years in a row. AKA, if anything is pricing in 60% or higher, the Fed goes ahead with it as to not upset the market. And they have kept this trend for 60 years. So Fed meeting after Fed meeting for over 60 years, whatever is pricing above 60%, that always happens. So this is what I'm trying to show you leading into the next few days with Powell, because clearly update here, a little bit of relief in the morning, panic at the end of the day. We're not really learning anything new until there is a real big development. So now with only one day ahead of Powell, these Fed futures are going to determine anything. And if anybody is going to slip up, it's most likely going to be FRC. So like I'm telling you, as of now, 25 basis points is priced in for Wednesday. That could change. And really, only thing that could change that, it will be another bank event. So what I'm trying to tell you is if nobody goes bust until now or Wednesday, or FRC does not become the black swan, then Powell should go ahead with 25 basis points. And that would be bullish simply because it would not be the Federal Reserve panicking and changing strategy to respond to what's going on in the banks. That would be temporarily bullish, and we're going to have to talk about how to read the event for it. But now, one thing I want you to understand, assuming nobody goes bust between now and Wednesday, when Powell comes out and gives his report, the why is going to be more important than the what. So the what is how much they're going to do. 25 basis points, 0 basis points in pause. That is the what. But the why, that right there is where it gets really interesting. And that is going to have more emphasis, and people are going to trade more on the why than what actually happens. That's why, as I'm explaining to you, 25 basis points is bullish, bearish, pause, bullish or bearish. Like we're saying, we don't really know what's going to happen, and most of it will be temporary because it all depends on the why. So let me give you a scenario, and this is something I think can happen on Wednesday, is let's say FRC does not go bust, no events till Wednesday. Fed futures are pricing in 25. Powell goes ahead and says, I'm doing 25 basis point rate hike. That is the what. But then if he explains the why to say, well, this is what we're doing, but the reason why is because we plan to stop ongoing rate hikes or setting up for a pause, I could really see that happening, and that would create a mixed response. One, you would get your rate hike, people would respond to that, and they might either take it positively or negatively, but then the why, and then setting up for another pause, that could cause a way bigger set of reactions that people are going to look forward to and then aren't as easily shot down or addressed all within the press conference. So keep that in mind. That is what I'm going to be really looking for. But one question we've been going over all day today is just really how hard this is going to be able to forecast the why, meaning the up and down and what is really going to happen. Nobody knows. If you haven't realized it by now, 11 days into this, multiple banks are failing. Powell and the Fed and Treasury, even during a blackout period, they're coming up with all these new things. The situation is moving fast right now. There is definitely a lot going on. How Powell communicates this is going to be key. And sadly, Nick Timmerhouse today, they call him the Fed leaker. So usually when the Fed futures, this one I showed you with the 60%, when it's not where, this is all a theory. This is all what people assume. When it's not where the Fed wants it, the running theory is that the Fed leaks it to Timmerhouse, and then Timmerhouse puts out an article, and everybody knows to listen to Timmerhouse, and then the Fed futures move, and then boom, the Fed gets whatever because of Timmerhouse, right? Well, even today, this was his tweet. My guy is even saying how hard and difficult this will be to communicate, and how the Fed is stuck between either raising or pausing, and then all of the implications. So hopefully you see what I'm getting at, what I'm trying to tell you. We have a general idea of what will be good or bad. Like I'm saying, if they don't end up pausing, it is good in the sense that it's showing the situation isn't bad enough to throw Powell off course. And then if they end up pausing, why it's bad, I think it's bad because it means this banking situation is going to be a problem. But short term, when people hear pause, chances are they're going to buy that up, and then people are going to keep buying tech stocks simply because they're like, okay, lower rates. And if you've noticed, the last week, tech stocks outperformed everything because whether or not it's high rates or low rates, people are also referring to them as a safe haven. So it's getting wild here, but like I'm saying, thankfully, we only have one more day. We deal with tomorrow, watch FRC, see if anybody goes bust with there. If not, Fed futures gives us the answer. Watch for Powell to deliver on the what, and then his why to explain what's going to happen in the future, and then we respond from the what. This is something a lot of people have been asking, the plays and all of it. Again, I'm still in the TYD. I'm going to get ready to really anything that's risky in shares. I'm planning to sell out of it and move it into the bonds unless I decide to keep it. Like, I think I'm going to hold some Tesla shares and all of that. But what I'm trying to tell you is I'd rather move any plays into bonds. You're taking the risk all across the board, but the real play is after Powell talks. The play is not front-running Powell. You're in the middle of a giant crisis. We don't know what's happening. We need Powell for confirmation. The idea is not to front-run Powell. You are trying to react to Powell, see what he does, see why he does it, and let that guide the next couple of months, and our plays are going to come after Powell. So if you don't know how to position coming into Powell, great. You don't need to do much. I'll see you on stream on Wednesday and react to when we get that data. So Chad, I hope this all helps. I hope you get the FRC theory because we've been talking about some of it, but the way I'm looking at it, it's either 25 basis points in the bag right here, right now, coming into Wednesday, or FRC ruins it, and then it's over. Oh, wait, I forgot I could stab it. I don't want, okay, yeah. But that's it, Chad. That's your watch list. I love you all. Thank you guys again for the support, the subscribes, the likes, all the people on stream. And let's go, baby. It's your time, okay? Pray for that gift. Pray for that gift to help out other people. You know what I'm saying? You like, y'all couldn't see the smiley face. Y'all see, is it weird? Yeah, what's up, son? Be happy today. It's a good day. Okay. What's up, guys? My name's Smile. This is what I do. I have an imagination, but it's good. Okay, I'm gonna leave right now. Okay, you want the bull? Okay, goodbye. Hey, yo, I forgot my Jollibee cup. I was gonna say, yo, shout out all my Filipino. I had some Jollibee, bro. This ain't even a sponsor post. You know what I'm saying? If you know, you know. They ain't never seen Jollibee. Not everybody understand. Let's go, baby.